I know what's going to happen. I've known what's going to happen for a long time, right? That might be the problem. But where we are right now is exactly where I've been forecasting we would be, even going back to, my predictions of the 2008 financial crisis. I knew that crisis was coming because I understood the mistakes that the Federal Reserve made to create that housing bubble, and I knew the consequences for the financial system when it popped. But even before the bubble popped, I knew the mistakes the government was going to make. I predicted QE before I even knew the word. I knew they would do this, and I knew they would inflate an even bigger bubble that has finally popped. Because I knew that eventually the Fed would be in a position, and other central banks, where they would have created so much inflation that they would now be under pressure to do something about the inflation problem, but they couldn't do that without creating a worse financial crisis than the one that they used inflation to mitigate in 2008. And that financial crisis has already started. We saw that with the failure of Silicon Valley Bank and Signature Bank, and a lot more banks would have already failed had they not been bailed out. The government, came in and propped them up and printed more money and came to the rescue, which is another mistake. But we're at a point now where inflation is going to start to run out of control because the Fed has started to return to inflationary monetary policies when inflation is already, triple its 2% target. We're starting another recession from the weakest, financial position that we've ever been in. And all the stuff that's been happening is stuff that I predicted. In fact, even when COVID first started, and everybody was saying, oh, this is very deflationary. I said, no, it's not. It's massively inflationary because people are not working, they're not producing, and we're printing even more money than ever. We're actually paying people more to stay home than they earned when they actually were productive. I said, this is, creating even more inflation. And so we're at this ticking point, and in fact, when the central banks had to keep interest rates at zero for so long, they did that for a reason. That was because they didn't want the whole thing imploding. So they kept it on life support until they couldn't do it anymore because of the outbursts of consumer prices. But I think we've passed that point. And so this is happening. This is the time frame where the air is coming out of this bubble. It's still early. If you remember in 2007, when the subprime market blew up, and I was very active there. We had shorted the subprime market. I mean, they wrote a book, they made a movie about that trade. Well, I lived that trade. We did that trade. So I was predicting, subprime. I mean, you can go, one of my videos on YouTube is mortgage banker speech I gave in 2006 in front of 3,000 mortgage bankers. I went there to promote this hedge fund that was shorting subprime, but you can still watch my talk. What you don't have on the internet is the smaller talk that I gave later specifically on that fund, right? This was the larger talk. I had about maybe 50 people that came to the smaller presentation about the fund. But I knew at that time that the bursting of that bubble would create this crisis. But when the subprime problem initially reared its head, everybody said, don't worry about it. The Federal Reserve said it was contained. Ben Bernanke said, don't worry about subprime, it's contained. Well, I was on television at that time, all the time. I used to be on cable news every week back then. I said, no, it's not contained. This is the tip of an iceberg. This is a huge problem in the entire mortgage market. We're headed for a financial crisis. It's anything but contained. Well, the government got that wrong. Then when inflation really burst out as far as high prices in 2021, what did they say? Oh, don't worry about it. It's transitory, right? Well, I said, no, it's not transitory. It's permanent. It's here to stay. They were wrong again. Well, they're ignoring the warning signs again, just like they ignored the subprime problem, just like they ignored the outbreak of the CPI. They're ignoring all the early warning signs of the financial crisis that we're in now and the Great Recession that's beginning that is much worse than the last one. And so the significant thing is going to be the difference, because I think this time we're headed for a currency crisis. That's going to be the end result of this next collapse, is going to be the end of the dollar status in a currency crisis. And so you have to have a very different investment portfolio than the one you had in the prior decade. Just hiding out in tech stocks isn't going to work. Those stocks are going to go down. You have to have the international value, the dividend paying, the commodity exposure, old-fashioned type investing, gold, and that's what I'm doing. And again, for wealthier people, you don't necessarily have to buy my funds. You can buy my funds, but we have separately managed accounts. So if you contact Europe Pacific Asset Management, we manage portfolios, individual portfolios of stocks that I think will perform extremely well during the economic environment that we're in and that we're going to continue to be in. Most people, unfortunately, are going to get wiped out. People are going to lose a lot in this environment, but there's going to be a small percentage of people, there always are, who will make money during this time period. And I just prefer to be among those people, right? Just like, not everybody made money off the subprime collapse. There were a number of people who understood the problem and bet against the conventional wisdom, and they made money. And the conventional wisdom is generally wrong, and it's wrong right now. They expect things to happen and aren't going to happen. They have a lot of confidence and faith in central banks and the Fed, and they're wrong. This is not going to end the way they believe. There is a huge mispricing of assets now, just like there was for mortgages back then. A lot of people don't understand this, and they're going to suffer, but the people who understand it are going to profit. And I'm hoping that as many people as possible, I can help them profit by getting them properly positioned with their portfolios.